Good morning, everybody. Paul here, coming at you with another Crypto Coffee update where we talk about all of the news, events, and happenings in the exciting world of digital finance. And let me tell you, there's always something new going on. Before we jump into the articles, though, for the namesake of the series, join me for a simultaneous sip, a swig in solidarity, enjoying a nice fresh cup of coffee. That was a powerful alliteration. I'm proud of that one. Heck yeah. Cheers. All right, awesome stuff. So today we are going to start off with Bakkt, and they had a Series A funding round that topped $700 million. For those out there who aren't aware of Bakkt, let me get you up to speed really quickly. The Intercontinental Exchange is an entity that owns Bakkt. They also own the New York Stock Exchange, a little-known trading platform, and other exchanges all around the world. So this is a major entity that deals in finance, particularly seemingly digital finance and other major markets, that is seeking to break into the cryptocurrency, particularly Bitcoin space. With a raise of $700 million, it goes to show that Bakkt has many, many connections, most of which have very deep pockets and are willing to fund this sort of endeavor. Ultimately, this has been an exciting development for institutional investors who want to have contracts that are settleable in Bitcoin. While this introduces a level of custodial relationship, ultimately they're still in the early stages, and unfortunately they're about 5 months behind in terms of when they expected to launch, mostly due to regulatory issues. However, as said, with $740 million now behind them, they can afford to slowly but surely check all the regulatory boxes that need to be checked in order to ensure the most compliant launch. Also, interestingly enough, they are proposing a fee of 50 cents per contract, which is comparatively, as the article states, rather small, as the next cheapest US trading option is currently 8 basis points, so they're really undercutting competition. The article inceptuously says they really need a lot of volume if they're going to make up the difference in terms of what they're charging their customers. This could potentially bode very well, especially as retail investors have expressed interest in this type of thing, and the fact that they need a lot of volume means that it could be a match made in heaven that may have residual effects for us retail traders out here in the wild. So really interesting stuff, and we'll keep an eye on the Bakkt fundraising as it moves forward. Not only that, the delay may potentially be due to CFTC concerns coming out of Cointelegraph today. Ultimately, what was said is, quote, from Bakkt, we're working through the regulatory review process and are looking forward to updating the market soon. So nothing too major and concrete. However, quote, people familiar with the matter, which isn't necessarily the strongest source, doesn't mean it's not true. We'll just take it with a grain of salt, had essentially said that in particular, the CFTC would require a disclosure of the venture's business plan and a public comment period, which would, of course, further delay the process. However, it would ultimately mean that there's a lot of fiduciary responsibility on the table as Bakkt is communicating with its potential customer base well in advance. So ultimately, as said, we'll take it with a grain of salt, but we'll keep an eye on this really exciting giant institutional entity as things develop. So moving on, everybody's favorite social media giant, perhaps Facebook, they're launching a stablecoin, allegedly, according to the Kick founder. He's saying that it's sort of a WeChat variant, and that, quote, WeChat allowed people to take their money out at any time, but they also added more and more reasons for people to keep their money inside, paying hydro bills, buying food, booking vacations, etc. Soon, no one was taking their money out. So this may well be something Facebook is attempting to emulate using their own native cryptocurrency. After all, if for any reason there are fees on the platform like that, then any kind of transaction that happens within the Facebook ecosystem could bode extremely well. Really interesting to see. $689 billion remittance market was essentially taken advantage of as Messenger, Instagram, and WhatsApp allowed for interoperability interface for Facebook's current system. Now again, introducing a cryptocurrency comes with a lot of speculation, especially on the part of Facebook, and some of that speculation entails Facebook breaking into emerging markets such as India, Mexico, Vietnam, Egypt, the Philippines. So really, again, all this is speculation for the time being, but really what that means is it's starting to shape up to look like it's not a Bitcoin competition per se, more of a stable coin. So that could potentially be good news for Facebook, ultimately, if they receive some kind of kickback from every individual who uses this new Facebook crypto on their respective platforms. Now, not so good news for Facebook, as they were storing hundreds of millions of user passwords in plain text documents for years. And as you could probably imagine, this is not the best in security practice, since anybody who could potentially glean a copy of this document would be in control of hundreds of millions of users' now private, well, now not so private data. And ultimately, this is not what we want to see. My Facebook insider said access logs showed some 2,000 engineers or developers made approximately 9 million internal inquiries for data elements that contain plain text user passwords. So we're talking about millions of inquiries for these passwords from plain text documents. So any kind of, even a basic keylogger, could potentially cause a lot of headache and issue down the line for any poor individuals who had their information stolen in this way. This just goes to show that there is a large discrepancy between Facebook in terms of their security practices. Not only are they reeling from a Cambridge Analytica data scandal, but they also can't seem to even store users' passwords in a way that ultimately has their best security practices at heart. Looking at the obverse of that Facebook wants to launch a payment mechanism, just perhaps can instill in any individual a notion of skepticism as to how Facebook is ultimately going to handle the financial data of their users. So this is a very weird inflection point in history where we have these existing giant corporations that we interact with multiple times a day on a daily basis, most of us at least, ultimately not having our best interest at heart. Perhaps that's kind of a no-brainer to a degree. Of course, they're profit-driven, but at least I think individuals would like to see some good faith in terms of storing user data in a way that isn't just blatantly a huge risk, not only to the company, but the individuals as well. So it'll be wild to see. Hopefully the SEC has something to say, helping to instill best practices, and they're actually amping up their efforts to regulate virtual currencies and offerings and exchanges as well, as you can see here. This is just an article I wanted to bring up since we talk about regulatory compliance quite regularly here at Cryptide. It's something that we want to be sure that none of our friends out there, if they have a fantastic idea, they want to really do the best they can and bring a product to the market to help the world, help this industry, they don't get caught up in any kind of regulatory red tape that can ultimately lead them down a path where they have to grapple with authorities and dig through a bunch of paperwork needlessly. As said in the previous Crypto Coffee update, the SEC prefers you ask permission rather than for forgiveness. But ultimately, there are levels of guidance that are currently out there that can help you discern whether or not what you're offering may well be a security. Of course, as a disclaimer, none of this is financial advice. This is just your buddy Paul doing the best I can with the information out there to put it in your hands and help you make the best decisions possible for your own self, because it's all about doing your own research and sharing is caring. The article starts out with a definition of virtual currencies, ICOs, and blockchain, which I'm sure most of you are well aware of, and we won't stay too long beating a dead horse there, since if you know about it, no point in covering it, and you can always check the sources below in the description, since, after all, citing your sources is so important. We gotta have transparency in the space, guys. But the important thing is, and we will read this section here together, as an initial matter, Sections 5A and 5C of the Securities Act of 1933 prohibit the unregistered offer or sale of securities. This particular section, a security includes an investment contract defined by the Supreme Court as, quote, an investment of money in a common enterprise with profits to come solely from the efforts of others. Sounds like a good amount of ICOs we saw back in the day, right? And here is the citation for that in particular. The SEC has determined that virtual tokens frequently meet this definition and are therefore securities within the definition of the Securities Act. Makes sense. See this particular section here. The DAO, or Decentralized Autonomous Organization, report that they created. In this report is an example of the Decentralized Autonomous Organization, as said, which is a virtual organization executed on a distributed blockchain. To the extent offerers of virtual tokens that meet this definition fail to register the securities with the Commission, they have violated the securities laws. No good. In addition, the SEC regulates exchanges under the Securities Exchange Act of 1934. It's unlawful for an exchange to effect any transactions in a security unless the exchange has registered with the Commission as a national securities exchange or is exempted from such registration. So we're not going to go ahead and continue with this, since I think you get the gist of it there. Ultimately, these tokens have been many of them have been pegged as securities due to the expectation of profits from the efforts of others. So ultimately, if you don't have your network built, if other individuals are going to have expectations of profits from your endeavors, that ultimately may well be a security. There are exemptions, as we saw, and this is ultimately to, as stated by the SEC, protect investors from fraudulent virtual currency operations. This is a bit of a double-edged sword, since with great freedom comes great responsibility, so perhaps it could be argued that individuals who are checking out this sort of thing ultimately should be doing their own research. However, I think there's a happy middle ground that can be met, especially since this is a relatively new innovation. So let me know what you think of this below in the comments. If you think that the SEC stepping up their regulations and attempts to protect consumers is indeed what is resulting from their efforts, or perhaps really they're just stymieing the growth of what could otherwise be a very healthy and robust space. Because after all, there's a lot of fraudulent activity out there. One particular piece of fraudulent activity is from Ares Bank. They tried to raise $4 million and did so successfully for a crypto scheme. This individual, Jared Rice Sr., as seen, the Ares Bank CEO, ultimately lied about various elements of his quote-unquote bank, saying that not only did he have FDIC insurance, but also he was going to launch Visa brand credit cards, something that in actuality was not true at all. Not only did he not have any licenses to conduct banking in the state of Texas, but he was not FDIC insured, meaning any losses would be at the essentially at the feet of the investors. And there was no partnership with Visa whatsoever. So while it could potentially be argued that the prohibitive nature of regulation means that you shouldn't necessarily have to be FDIC insured or have a banking license to conduct this kind of activity, the lying about the Visa partnership definitely, I think, pegs this individual as perhaps more shady than not. This is something that I actually had a conversation about over a year ago. I believe it was over a year ago, maybe just under, with an individual on Twitter. This guy, Brett Jungblut, and he was saying that this guy, he pled guilty to a mistake, not a scam. This is something that I took a hardline stance on, saying that, look, this isn't legitimate. They didn't register with the SEC. It's going to burn investors. And my reply here, he admitted to lying about the Visa partnership, and ideology is no excuse for defrauding and lying to others. Our modern regulatory and banking systems have their flaws, but fiduciary responsibility means doing what's best for your customers. And this is something I, as I said it, ultimately wholeheartedly agree with. This was not a mistake. Oh man, you know how I said we were going to partner with Visa? Yeah, my mistake. That's not true at all. I had no basis for saying that. That's not a mistake. That's a lie, and that's fraudulent. And that doesn't necessarily, or really at all, embody the idea of fiduciary responsibility, trying to do what's best for your customers, since even if you ideologically disagree with this banking system, as I do by and large, it doesn't mean that ultimately you can just circumvent the existing laws and regulations, especially if you're raising money from other individuals. It ultimately leads to a shady state of affairs that hurts more people rather than helps. And ultimately, if you want to launch something like that to help people out, why not do something like MakerDAO? It is a decentralized autonomous organization, which means, as said by the SEC, they may have to register as a security, but based on jurisdiction, maybe not. Recently, MakerDAO voted, they didn't vote particularly, the users on the network voted. Decentralized autonomous, right? Cool stuff. They're raising the interest rates to 7.5%. And this is a very interesting system. I went ahead and did my research on it, and it is fascinating. Essentially, it allows you to lock in collateral using Ethereum and receive up to 60% of that collateral in MakerDAO, which is a pegged one-to-one stablecoin. When that stablecoin drops below $1, essentially individual users are incentivized to purchase it to pay back their loans for cheaper. When it's above, they're incentivized to essentially sell their loans to make a greater amount than they submitted the loan for. I think that was a little rough wording, but hopefully the concept is translated well. My good friend Mitchell Moose here, he dropped a fantastic article talking about not only how the system functions, but also the fact that they ultimately supported a rate increase. And this was the highest amount increase. Ultimately, they raised it from 3.5 to 7.5%. So we're talking a huge jump. This just goes to show that in a decentralized network, it is a moving target for how to discern rates. So it's really amazing to see that individuals with a vested interest in the system are the ones controlling these rates. And interestingly enough, a whopping 2% of total Ethereum supply is locked in Maker contracts, which may have an inflationary effect on the Ethereum price. So watching this ecosystem develop and mature to have a decentralized autonomous loan system, which can in turn affect the overall price of the underlying currency in which it is denominated, is fascinating. We're really watching a level of maturation in this ecosystem ecosystem just mushroom out into something great. So fantastic stuff. And this is in part thanks to Mr. Vitalik Buterin, and he himself has clarified some of his financial holdings, as that has been a piece of speculation. After all, being that it's a blockchain, everything is to some degree or another able to be audited. It is transparent, and some individuals broke down his holdings, saying that he could have roughly $47 million in total, with the coins trading at only $135 each. I actually saw this thread as it was breaking, and at the height it was saying that he was worth around $500 million in net worth at the height of the 2017 bubble. So when we enter into a new bear market and shatter those previous highs, it's going to be fascinating to see how Vitalik's valuation ultimately increases. Also, he had a lot of charitable donations, about $8 million, which I think was really cool. He not only donated to a plethora of various projects that are trying to develop within the Ethereum ecosystem, but also some various other charities that he found particularly interesting that he wanted to support. So it's always good to see high net worth individuals giving back, reaching out, and trying to not only help other individuals in need, but also contribute to those in need that want to help to grow the ecosystem. So all's well that ends well there. There's a lot of estimations about his crypto holdings. He holds some Augurs, some Omise Go, some Kyber Network, some Maker, of course. He seems to be very interested in Maker, with the better part of a $500,000 invested. So this is just really interesting. Nothing huge, nothing like groundbreaking that would be mind-blowing per se. He also has a salary from the Ethereum Foundation, but it just goes to show the level of transparency that blockchain instills, especially for individuals who primarily hold their holdings in cryptocurrencies. This is in contrast to the very opaque nature of banking, in which there's an entire subset of banking called shadow banking that isn't readily auditable in any way, shape, or form, and in part contributed very heavily to the financial crisis of 2008. So in contrast, this is extremely transparent and very exciting to see. Let's go ahead and move on to a legacy financial institution, talking about Overstock and their T0 platform. I said legacy financial institution. They're not so much a legacy financial institution as they are a legacy not retailer, I guess they're legacy retailer where they sell particular items. Overstock jumped into the cryptocurrency game early, 2014. They jumped into the fray, and ultimately they were rewarded for their patience considering the huge precipitous rise of Bitcoin's valuation. This assumingly allowed Overstock to reach out and grab some subsidiary entities, specifically Medici Ventures, which in turn owns T0. They also own Medici Land Governance. They have Factum, I believe, under that umbrella, and plenty of other Identity Mind, that's another one. They manage identity, but in particular we're talking about Overstock's T0 today, and they are looking to launch a Bitcoin trading app come this June. Here is a quote from an individual from Medici Ventures. As said, they're an app for trading crypto, primarily Bitcoin, in a beta phase. They built a wallet, a key recovery mechanism, and this will be the foundation of the mobile app for T0. They're also working on some cool stuff like a biometric login. No word yet as to who they're partnering with for a biometric login, but one would have to wonder, in a closed ecosystem like this, I'm going to call it that they're more than likely going to be using what's called Identity Mind. Again, if you take a look at Medici Ventures, you can look at the subsidiary entities. So given that Identity Mind and T0 are both owned by Overstock, I would hypothesize that to be the case. So really interesting stuff. Nothing too groundbreaking and revolutionary here, but definitely exciting to see. And I think the big takeaway is that existing entities are creating subsidiary entities as an umbrella to purchase a lot of these various blockchain and cryptocurrency projects. So you can see some potentially unexpected entities interacting with the space in very exciting ways as we shape up this new world of digital finance. Now, one thing that can't really be faked is hash power per se. It looks like Bitmain is looking to definitely put their money where their mouth is, and they're going to be buying $80 million worth of Bitcoin miners, specifically for cheap hydroelectric power this summer. This is something that runs concurrent with a previous Crypto Coffee update. We looked at an analysis as to how Bitcoin energy consumption actually functions, and it turns out it's one of the surprisingly most sustainable forms of energy consumption out there, due to the fact that, well, Bitcoin miners are semi-mobile. They're not like schools and hospitals, which you can't really pick up and move. Bitcoin miners are relatively flexible. So a lot of the times these miners will plug into cheaper hydroelectric power in places like China, where a lot of these hydroelectric dams have been built, and take advantage of the comparatively low cost. So Bitmain doing this isn't necessarily surprising, but just goes to show that they are looking to kind of reinvest some of the capital, assumingly that they've gained from their previous mining activities, and take advantage of the comparatively low energy prices. Keep in mind, we talked about in the last Crypto Coffee update the new ant miner that they're releasing. So yet to show, or yet to be said, if they're going to be offsetting the comparative inefficiencies of the old miners using the cheaper power from these hydroelectric plants, and rather switch out their older miners for newer miners where energy is comparatively higher to get that comparative advantage. But the mining game is really, really wild. It's something that is very difficult to pin down. It is a special niche in and of its own right, and it's not something that I particularly have delved into since I'm not a miner. I'm more of a researcher and an analyst, and it is fantastic to be able to see how hashing power ultimately affects the chain and how this I guess slightly different segment of the cryptocurrency economy and ecosystem functions. You can see here the overall hashing power, and it is currently 48.57, and it really has bebopped all around. So this is something that is really, really peculiar. Let me know if any of you are miners out there. I'd love to have a conversation about that, because again, it's not something that I don't really delve into, and it seems as though there are two different kind of sides of the crypto community in that way. So yeah, hit me up in the comments. I'd love to have a conversation about how you set up your rigs and how you what tools you use to predict profitability, since it seems to be very, very diverse across depending on what coin you're mining, what country you're in, energy consumption, etc. Now, while hashing power can't really be faked, one thing that can be faked, unfortunately, is volume. And, oh man, it looks as though the website might be down. It's something I found just this morning. It's a new tool that talks about how Bitcoin trading volume is indeed very, very fake for the time being. Giant blinding white screen isn't really doing it justice, unfortunately. But suffice to say, I don't have it pulled up, unfortunately, but it's a new tool that lets you discern what volume is real and fake. I'm going to circle back and check on this a little later on. Of course, the link will be below in the description, but they're probably doing some maintenance or something. So either way, worth checking out, and I'll probably put some screenshots, perhaps if you guys are interested, or you can check it out for yourself. Now, one thing we're all wondering about perhaps is, where's the price going? When's the bear market over? Well, that's not my area of expertise. As said, I'm a research analyst. That's what I do. I'm not a technical analyst. However, my good friend Origami Oracle, he is a technical analyst, and he is a great one. The dude really knows what's going on. He's very objectively minded and very willing to admit when his bias may be affecting a particular prediction. That is something that is rare, considering that generally there's a associated hot-headedness and egocentricity associated with these kind of predictions, since you're either right or you're wrong. Let me tell you, Origami Oracle cuts through all of that and gives a concise prediction as to what's going on, and is willing to admit when he's wrong and tell you what he was looking at that may have led to those conclusions. And let me tell you, the dude is definitely inceptuous in terms of figuring out what's going on. He has a trading journal as well, so every day, if you want to keep track of his predictions and what's going down, you can see it live. Really fantastic stuff. Also, follow him on Twitter. He always posts his predictions and that sort of thing, so you can stay abreast to what's going down. And even cooler, we're always hanging out over in the Discord, so you could check it out. You can catch Origami Oracle there. You can check your good buddy Paul there as well. We're always having discussions about what's going down and sharing relevant information, like we covered today. One more try on this website here, just going to see if it works. Oh, boom, it worked. Sweet. Yeah, go check out Origami Oracle. You see, man, the dude's name alone fixed the website. Whooshah, awesome. But yeah, suffice to say, 95% of the reported Bitcoin volume is indeed fake. We've hammered this home here at Cryptide, that wash trading is huge, and this is why entities like Bakkt are so important. They have assured volume for their institutional customers. This is why the SEC is stepping up to regulate these kind of things. It is very shady. Now, here is apparently the actual Bitcoin volume. While they say it's not perfect, they're working on assuring that this is exactly what is real and not some of the fake wash trading that we see all over the markets. So this is a huge step in the right direction. I'm very excited to see it. You can read the full analysis here. Oh, it actually downloads it, but yeah, suffice to say, it's 244 pages. I'm digging into it here this morning, so really excited to see what conclusions they've come to and how they've established their methodology. But with that said, we will wrap that up here. Great episode today, guys. Really love covering all this stuff. As said, go check out Origami Oracle. Follow him on Twitter. Love the dude. Does some great stuff. And let me know what you think of this kind of content below in the comments. We have all the sources down there, and join the Discord. Would love to have a conversation with you guys. Much love for now. My name is Paul, signing off. We are Cryptide, and remember, the tide is rising, as is the transparency in volume in the crypto space. And man, it's about time. Good stuff.